In this video, I'll be reviewing LLC or Limited Liability Company versus INC, which is corporation. So before getting into the video, you can create your LLC with Northwest by using our affiliate link in the description and save 83%, paying just $39 for LLC formation. You'll also receive a free year of registered agent service and discounted rates on annual reports and EIN service. Now let's get back to the video. So first of all, we're gonna go ahead and look at LLC. An LLC is a versatile business structure that blends the flexibility of a partnership with the liability safeguards of a corporation. Its simplicity and tax advantages make it a popular choice for small to medium-sized enterprises. Alright, so now we're going to look at some features of limited liability company. The first one we have is liability protection. So just gonna go ahead and write it down. Liability protection. All right. Members of an LLC are generally shielded from personal liability for the company's debts and obligations. This means your personal assets are protected. The next one we have is management. Management, perfect. LLCs can operate under either member-managed or manager-managed structures. In member-managed LLCs, all members participate in decision-making, while manager-managed LLCs delegate management responsibilities to specific individuals. Now, let's look at taxation. Okay. LLCs typically enjoy pass-through taxation where profits and losses are reported on members' individual tax returns, avoiding double taxation. However, some LLCs may elect to be taxed as corporations for specific tax benefits. Alright, so that is it for LLC. Now let's go ahead and look at corporation. A corporation is a separate legal entity distinct from its owners, known as shareholders. This structure is characterized by a formal organizational framework and robust liability protection. So again, let's go ahead and look at some of the features. The first one we have is liability protection. Liability protection. Shareholders are generally not personally responsible for the corporation's debts and liabilities. This separation of personal and business assets is a key advantage. The next one we're going to look at is management. All right. Corporations have a hierarchical structure with board of directors overseeing the company's strategic direction and appointing officers to manage daily operations. And lastly, we're going to look at taxation. Corporations can be taxed as C corporations or S corporations. C corporations are subject to double taxation, meaning the corporation pays taxes on its profits and shareholders pay taxes on dividends. S corporation offers pass-through taxation but have eligibility requirements. Now, let's look at factors to consider on what is appropriate for your business. The first one we have is liability exposure. Evaluate the potential risks associated with your business and the level of liability protection required. The next one is tax implications. Analyze the tax consequences of each structure considering your income tax bracket, business income, and long-term financial goals. Should also look at fundraising needs. If you anticipate raising capital through equity, a corporation might be more suitable. Next feature is control and ownership. Consider how you want to manage the business and who will own it. And lastly, we have succession planning. Determine your plans for transferring ownership or management in the future. Now, ultimately, the decision between an LLC and an INC depends on your specific business needs and objectives. It's essential to conduct thorough research and consider consulting with legal and tax professionals to make an informed choice. By carefully evaluating these factors, you can select the business structure that best aligns with your visions and goals. So, alright, guys, that'll be it for the review. I hope it helped you out, and I'll be seeing you guys next time. Peace out.